discuss some big trends, both technicals and in terms of market behavior. Master trader Atul Suri joins us. Good morning, Atul. Great to have you back. Oh my
Awesome.
God.
Great to be here
Oh
with
my
all
God,
my friends.
that's a new look.
Yeah, I know what to do. I mean, how many hairstyles and hair lotions can you try? Then you say, okay, just give it up, go for it. Like, it's like playing on the front foot.
But is the market playing on the front foot? Because this time around it's been smarter than the event. It seemed like, the way it moved yesterday, that it's priced all of it in. Is the near-term event risk over?
Yeah, maybe, but I also think that the biggest thing that's coming, I feel that though most Indian participants may not agree, is what's going to happen to the US Fed rate. People feel it's fully discounted. I don't think so. I feel that the surprises will still be there. And if you really look at the last 1 year, if you look at the market, like let's say last Diwali to this Diwali, it's what, 54 weeks actually, because we are 2 weeks late this Diwali. I think it was October 23rd. We were at 8,014 or something of that sort. And we had a good 13-14% rally. So till I think March, we had touched 9114, right? And then after that, what has happened is we've been really trending down, and we've given back all those returns. And for Diwali to Diwali, we are what, down 2% or so. So
that's in absolute terms. Think about dollar terms. I mean, even it's worse.
Absolutely, absolutely. And because we were at what, 7%, I think, dollar depreciation. So you factor all these things that on the index, etc., it looks like a flat. Yeah, when you say 2%, you think it's flat, but actually a lot has happened. You've touched a lifetime high, you've come off, and even globally, what mega trends have happened? Look what's happened to commodities. I think the biggest trade of last year has been commodities. I mean, crude is down 50%. An asset class halved. Asset class has halved. Look what happened to the Chinese markets. I mean, you look at stock markets and currencies of countries like Brazil. I mean, it's amazing. So I think that a lot has happened, though the index may seem 2% flat. And going ahead, I think that I feel the next 3 to 6 months will continue to be challenging. I think first speed breaker or hump is going to be the Fed rate hike. How much the markets are discounted, nobody knows. But I personally think that we will have some hiccups before that. And the big question for India has been earnings. The earnings revival to make a case for a larger fundamental bull market to take you to lifetime highs. And that's something, we've been hoping. And well, we are still hoping.
But do we go back to pre-Modi days, purely from an index perspective?
I mean, I'm not too sure we may really get down to those levels. The market is basing, there is hope and optimism. That is still there, that is intact. And that is why we are where we are. The disappointing thing is ultimately when you look at earnings.
Was that sarcastic? That's where we are because of the hope.
Yeah, I mean, at the end of the day, it's earnings, which will make a case for a longer term bull market. And it's not pretty out there. In fact, what's happening is, you're seeing a lot more accidents, like what's happened in the pharma space. What's happened to Dr. Reddy's last week or to Sun Pharma a month or so. So, even some of the big marquee names are falling. So it's not fun out there. If you're in the right spaces, you're saved. But 80% of that place has got hurt.
Atul, the question is, we are at 7,900, we are not at 9,000.
Right.
If you foresee a hiccup, if you foresee dollar strength because of the Fed rate hike, and therefore further catastrophe out there,
I'm not saying
we might actually go down to pre-Modi days.
I'm not saying a crisis kind of situation, but the fact is that we still feel we are in a massive bull market, but 6, 7, 9 months have passed and things haven't been pretty on portfolio levels.
People have stopped using the word bull market. Now let me put it this way. Bull markets, I mean, historically bull markets, they correct. But in terms of the character, in terms of behavior, in terms of participation, in terms of feel-good factor, it's not there. Let's be clear.
Yeah, I mean, the last 6, 9 months have not been so good. That's what I'm trying to tell you, that it's not been so good on the board. It could be a part of a consolidation actually, because bull markets, I mean, we've had a 2.5 year nice rise, and we may consolidate for 6 months more, or without any spectacular kind of moves thereabouts. And if you are in the right stocks, you're lucky, So out there, it's not been a very happy last 6 months.
So let's roll over now. Let's talk about the new Samvat here.
Yes, for sure.
Let's talk about mega trends. Money is made by not doing rear view driving. You have to always look forward, right?
For sure.
What are the mega trends for this Samvat here then?
I think just as currency was, I think, the big story of last year, I think going ahead, the dollar strength is going to be the big story. I feel that you will have a US rate hike December or whatever, but sooner or later, I feel that the US economy is showing a lot more resilience, and which is visible in the charts also. Barring yesterday's fall, what are they? 1 or 2% from lifetime highs. I mean, look at the Nasdaq. Look at those kind of markets, and so-called, the growth, the drivers of the world growth is emerging markets, and look at all those things. You look at Brazil, you look at Russia. I mean, the BRICS as a whole. Look at China's retracement. India has been flat. So I think the US is surprising on the upside, and I feel that the dollar strength is going to be the big trade, especially in the first half. And I think that's going to have a knockdown effect. Coming to your question, Nikunj, is about where the trends will emerge in India. And I think you'll have a knockdown in large cap IT. I feel that large cap IT has been consolidating for a lot of time now. And I feel that large cap IT would do well.
Specifically large cap IT?
I would think so.
No mid caps?
Mid caps, some will definitely do very well. But again, the question is that, Aisha, it's you have to be very careful. You have to be in the right stock. If you're not in the right stock, you can get smashed. In the large cap IT, for a retail investor in HNI, you kind of will not lose your shirt. I think some of the even select pharma names, you had some disasters, but some charts out there are amazing. They are trending out so well. So many of them are near lifetime highs. So being a trend follower, for me, it's very simple as to see where the price damages are, and that is actually as I said with Sun Pharma. I mean, the damage is shocking, and it was a beauty for last 5-7 years. It was a darling. It was one of the smoothest, best performing stock chart in India, in Indian markets, and serious wealth was created by people who held on. But so much has changed in the last 3 months.
So you won't dare touch it right now. Is that what you're saying?
That's a different story. You may come up as a strategy and things like that. But what I'm talking about is the trends. I feel that IT large cap has consolidated and is due for a big move up. I think there have been select pharma stocks which are going to do well, and the whole story of your cyclicals and all, I think will take some time. For that, you have to see some sort of earning revival or some
Where
sort
will banks come in the?
But I just want to talk about this one. The key seems to be that what the charts are saying and what the CEO commentaries on the IT companies are saying seem to be in the same line. Brokerages may be bearish right now, saying that hey, the results haven't been that great. But the CEO commentary, be harping about it, has been extremely positive.
Neeraj, for the longest time, I've learned for the longest time that brokerages, they find reasons to justify underperformance and outperformance. Yeah. IT as a group has not made money. So brokerages perhaps have to come out with the reason saying that, look, why they've not made money. Look at Cognizant, 21% annual growth commitment. TCS, 17% annual growth commitment. I can honestly count on my fingertips that how many companies which are not from the IT sector are confident of growing at 17%. And if there is dollar strength, valuations for IT is not expensive. IT as a sector has done nothing in the last 2 or 3 years.
I mean, save a TCS, all the others are maybe 12, 13, 14 PE or maybe less than that also.
HCL, all
so
of them.
The charts and the CEO commentary seems to be okay, but
So just buy the IT index? I mean, could that be the big trade? Buy IT index, keep it for 1 year?
I think so. I feel that you could see that, because the way the dollar, I foresee that when I look at the DXY, the dollar chart, or the euro dollar for that matter, you see that the way it is poised, I feel that you can have a very good move in the dollar, and this I'm sure will benefit. And the thing is, Nikunj, that there are not very many opportunities elsewhere in the market. At the moment, people are just holding on to strings. Wherever there is a string, people are latching on to it. I can understand if there's a huge opportunity in other space in the market, you say, okay, this is relatively. But the number of strings are decreasing by the day. So whatever will stand out, people are going to latch on to it. And this is a place where I don't see this huge overweight or something of that sort, So I do think that they could
Seems
be
like a fat rope.
Strings are few and strings are thinning. On that note, we're going to take a very quick break. When we come back, continue this very interesting discussion with Atul Suri.
The small cap index in the last 18 months has given a staggering 50% return, whereas Nifty has been flat.
Sure.
The mid cap index also has given a beautiful 30% return. So what happens to that end of the market?
So when you talk about the mid cap and large cap, we very often talk of it as like something very finite, but actually it's a very large universe. And my problems or my challenges have always been is simply because of the number of stocks there is. You'll always have some good story. And in case you have a bad one, you get really hurt. So from that point of view, that's what I always say, that for me personally, I've always been very, very cautious of this space. Unless until you really are sure about something, in which of course you make those outsized returns, which is a reality. But you have to be very careful. To use a very fundamental thing, it has to be very good bottom up. You have to have very good research, very good information, and very good grip on those counters. You just cannot get into anything and everything simply because of the size and breadth of that universe. Like we're talking about IT for that matter. If I tell you large cap IT, there are 5 names, or maybe 6, 7 names. How many names you have? You don't have very many of them.
There were 5, they become 4 because one stock has fallen so much.
Yeah.
Hardly a large cap anymore.
Yeah, but when you talk of large cap, you talk about 20, 30 stocks, and in that, you will find that at the end of the day, only 4 or 5 will stand out. They will give you much higher returns, outsized return, but the other 15 could actually be a minefield. So that's my challenge.
The other problem though with another pocket, you were mentioning about commodities being the super trade. All the commodity stocks, by virtue of the fall that they've taken, even if they were large caps, they are all now mid caps and small caps. The question is, can this somewhat mark the return of some of the commodity names? I hear a lot of people talking about sugar, a lot of people talking about some of the base metals as well, surprisingly. Do you like anything here?
See, it's basically they are driven by the underlying commodity prices.
Precisely.
Correct? So you have to really take a call on commodities. So you go back to the CRB index and you look at that. Again, when I look at the commodity space and on the basis of a dollar strength, I really don't think you'll have a very sizable trend. See, you will have spikes, you'll have spurts. And since they're oversold, beaten down, you will have these 20-30% kind of returns that will come in 3-4 days, and it will all look so good that you feel you missed the bottom. But lo and behold, in the next fall, you will find that they make a newer low. So that is the risk. So if you can trade that 30-40% bounce linked to what has happened in global commodities, and if you get a good short squeeze, they become a very good trade. But if you ask, are they going to be the trend for next year? Looking at the commodity charts, the CRB, etc., I don't get that feeling. And dollar strength, which I think is going to be the principal theme for next year.
Where will banks fall or fit into the jigsaw puzzle?
See, we've had a great outperformance in the private sector space. Yes, some of them are again correcting right now, but I do feel that some of the charts will still stand out. Some of the charts still do stand out.
The cream blue chip names?
Absolutely, absolutely. Those charts still stand out, and yes, they may be relatively.
So there is scope for an HDFC Bank to make money, even though HDFC Bank in last 18 months has given a 40% return.
Yes, absolutely.
So stick to the strength. That should be the
like something like an HDFC Bank. You told somebody 2 years ago, 3 years ago, 5. Everyone said,
7 years ago, 10 years ago,
give me
ago.
Tell me something new. But at the end of the day, what portfolio would have suffered if you had held an HDFC Bank? I mean, even IndusInd, just to add to a name, as a disclaimer, I do have a vested interest. Rare Enterprises may have in the stocks. Look at IndusInd Bank's chart. I mean, these are fantastic charts, and I do think that going ahead for whatever it is, if you are in those spaces, you will make. I feel the year ahead is going to be more challenging. It's not going to be a broad sector brush. It is going to be the right stocks in the sector.
Where does auto fit in? Because from last Diwali to now, while the Eichers and Marutis of the world have remained at is, there is a Tata Motors which has come up so strongly.
Yeah, I think that stock, again a big disclaimer, Rare Enterprises, and I have a vested interest in the stock. So please do your own research.
But that's not strength, no? I mean, you always believe in buying strength. Tata Motors has fallen from 600 to 300. So where is the strength logic here?
I'm not at all talking about that. But what I really see standing out in the stock in the last, I would say, a month or two, is that you had a market that is selling off, but telco is showing very good strength. Yes, it has fallen earlier, so there's no dispute about that. There has been a lot of bad news coming in the stock even lately. But you see the price performance that is coming. It is no longer getting into new lows, and I feel that it's making a basing formation. So if you ask me, if you're looking for being a trend follower, everyone accuses me of talking about these high-flying stocks which are very expensive or which have run up too much. But I feel that here could be a gem actually for the year ahead.
So you're not late to catch on to Tata Motors?
Yeah, it's a very different from my core strategy, but I also look at some stocks that do not fall on bad news, or stocks that do not fall in bad markets. And I feel that the stock has been showing some sort of basing formation. Again, as I said, it's not a recommendation or anything of that sort, but I think it's an observation. And I think that it could be a very interesting story because it's a large cap, it's in the F&O space, and it's a very popular stock.
So what is flying high is aviation.
Yeah, I mean, today could be a big day for it, I'm sure.
Will money be made in new Samvatir and aviation stocks?
I feel it will be very hot, very exciting in the next few days, weeks at least, for sure. And if the whole thesis of commodities being weak and crude does not do anything spectacular, I feel that you've got excellent tailwinds.
No disclosures here?
Yes, for sure. Do have a vested interest. Definitely have a vested interest. And it's not a recommendation for sure. But I think it's an interesting
It could
space.
be a dark horse. Aviation
it could be a very interesting space. Yeah.
Okay. What about commodities though? I mean, since you read the patterns on crude as well, do you sense that there could be a turnaround this year, or you don't know how the Fed is going to play out and how commodities will react
because Aisha, I feel that You see, you will have spikes. It's not that that every day the crude is going to go down. You may have a 10%, 20% strike, but you look where it is. At $40, $44, even if a 20% move, it's not going to, as long as it stays in a band for long, I think that is the beauty. You may have spikes to 55 or something and then again back to whatever. So those are good numbers to look at from a chartist point of view, but for a larger picture for the country where, we are so dependent, if it remains in this 40, 50, 60 kind of band for an elongated period of time, I think that's where the benefits will flow in. Like, point numbers are very good to talk about, but I do think that we are not going to see anything massive happening in commodities.
What's that one big contra call, very quickly, before we go to pre-open rates?
I think we spoke about telco, and I think that could be a very big contra call, because as I said, being a trend follower, it's no way, as Nikun said, near highs. But here is something which I recently see not falling on bad news or not falling with falling markets. And we know it's a great pedigree thing. It's a little hard times, but it could be very interesting.
Not a telephone company. Telco. Tata Motors keeps
Old timers still like to call it telco.
Disco
of course,
also?
the 1982.
Motor.
1992.
Or motor.
Motor ka kya bhav hai?
Motor ka kya bhav?
Wonderful. Have a lovely Diwali. Thank you for joining
all of
us.
you have a great time, and good luck.
We will see you soon.
For sure.
Thank you very much.
Thanks for having me.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.